Hey guys, this is Alex Owari from ONG Tax and Accounting Services. So in this video, we're going to share a very quick success story from one of our clients in Ukraine. This was a client who actually improperly filed a tax return and was assessed taxes of about $210,000, between 2017 and 2019. And we're going to show you how we were able to represent this client, what went wrong, and how this client has been able to, save a lot of taxes for having to use our firm to resolve the issue. So stick and stay with me, and then we will talk through it as we proceed along. All right, so before I start talking about the facts of this taxpayer situation, I must also, throw a word of caution out there that dealing with U.S. trade or business, or whenever a foreign person is doing U.S. business or has some kind of a connection with U.S. trade or business, the analysis is very complicated. And so you should know that this presentation or the testimony that we're going to give is very fact specific. It's based on the taxpayer's own fact and circumstances, and you should not construe this as a legal advice in any form. Your fact and situation or circumstances may be different from the situation that I'm going to describe, and you should always consult, a tax professional, a tax advisor in all cases. All right, so this issue was about a taxpayer from Ukraine. He was a non-resident alien. He's never been to the U.S. before. And it turns out he filed taxes for 2017. The IRS reviewed the taxes and said that, the taxes were filed incorrectly. Taxpayer should have paid $3,600 for 2017 tax year. He was also assessed for taxes for 2019 in a tune of $206,000, as you can see from the screen, for 2019 tax year. When you combine 2017 and 2019, this client was on a hook. All right, so this client owes $210,000 for 2017 and 2019 tax year. He was very confused and very concerned. And as you can see from the screen, they gave him, the IRS sent some letters, threatening to levy his bank account and levy his properties if he doesn't pay that $210,000. So we represented him, we signed contract with him, we represented him and made, based on the information the taxpayer provided, we made some strong argument that the taxpayer was not engaged in U.S. trade or business. And even if they are engaged in U.S. trade or business, because they come from a treaty country, the treaty should, be invoked to protect the taxpayer. So in November 2021, as you can see, we started this process in January 2021. In November 2021, we were able to put this issue to rest, and the IRS was able to send us a confirmation that the taxpayer does not owe any taxes for 2017 and 2019. So the 2017 confirmation is on your screen, and then the 2019 confirmation is also on your screen. And so as you can see, this was a very helpful process for this taxpayer, and the taxpayer was very excited. And finally, he has been released or relieved of a lot of stress, and able to go about his business and figure out the next step for his business. Now, one may wonder what really happened to this client and why is he being assessed of $210,000 in taxes when he's not actually, located in the U.S. Now, the fact of this client's situation was that he basically has his own website and he does drop shipping. And so he actually is advertising products that he does not own. So when the customers purchase the product from his website, he contacts the supplier on the other side to fulfill the item. So in a way, it seems like he's doing an arbitrage, kind of business where he's connecting the seller and the buyer together and making his cut of the business. Now, this customer or this client really made a lot of money. I mean, I think he made a lot of money if you can see from the 1099K that the customer presented, shows that he made, huge amount of money. So this amount of money was used on his original tax return for 2017 and 2019 tax year. And this is what generated all this problem. So a lot of the customer's activities was really conducted from a U.S. LLC. This was a customer that set up an LLC, had a bank account which was collecting the payment that he was, collecting from U.S. client, and all his sales was within the U.S., right? But the issue was that the client was providing, arbitrage services or dropshipping services. And as we have stated time and time again, if you are a non-resident alien and the only thing that you have is a U.S LLC, a U.S bank account, and a Stripe account or merchant account, and you do all the work from outside of the U.S., which is in this case, the taxpayer was doing all the work from Ukraine. And so the income that he was making from the arbitrage or the drop shipping was really not, connected to U.S. trade or business. At least that was our argument, that it was not connected to U.S. trade or business. And so, based on the fact and circumstances of this client, we felt it was, it was prudent for us to represent him in a very vigorous way, using the laws, the IRS code of income sourcing and how effectively connected income are determined. And then we also use some of the case laws to represent this client and show the IRS why we think that this client dropshipping income should not be taxed. So other than the fact that the client have a U.S. LLC, has a U.S. bank account, and is also selling dropshipping directly from U.S. suppliers to U.S. customers, he did not have any exclusive independent agent. He did not have any contractors. He had no offices in the U.S. And he himself, this Ukrainian taxpayer, has not even traveled into the U.S. to do any business. So it was prudent to argue that this taxpayer was not engaged in U.S. trade or business. So what really happened in this client case was he had, of course, he's making a lot of money. He contacted a U.S. tax accountant and to seek advice on what to do as far as the income he's making is concerned. And this is for specific tax year 2017 and 2019. And what the accountant did was basically took all the sales he made and then put them on a Form 1040 NR. So the Form 1040 NR was filed for this client. But what really happened was that the accountant, he knew a little bit about the tax laws and knew that, when a person is in this situation, as we've described before, this person was not engaged in U.S. trade or business. So what he did was to invoke the U.S. Ukraine tax treaty. So he did that. And then also one of the mistakes that was done was that he actually did not apply for ITI. And now I must stress that if you're a foreign person and you're filing any kind of U.S. tax return, or you're filing a return to claim a tax treaty, you always need a tax ID, whether it's a social security number or it's an SSN or it's an ITI, and you always need to attach an ITI. And otherwise, claiming the tax treaty will be denied because of the invalid tax ID. And what the IRS does is they would actually process the return, and then they will assign you a temporary tax ID, and then they would deny the treaty code, the treaty that you've claimed, okay? So now when the treaty is declined, all the income that you're saying was really not taxable has now become taxable, and the IRS will be chasing you for the taxes that you owe. So it's always important that the tax return itself that's trying to claim the treaty is actually completed accurately. Otherwise, you're going to have problems with the IRS, as this guy had. All right. So as we've stated earlier, once we're able to figure out all the client facts and circumstances, we're able to draft a proper argument and also attach the necessary document to the tax return. We made all the argument that the taxpayer was not engaged in U.S. trade or business, and we also stated that even if they were engaged in U.S. trade or business and the IRS really thinks that the income is effectively connected, this taxpayer has, the right to invoke the tax treaty between his country and the U.S. Okay, so those are the arguments we made, and the IRS later came back, and actually said that there is no taxes owed, as you can see from the screen. So I mean, this was a huge story. It's a great story to save someone $210,000. Especially when the person, as a foreign person, they are always confused about the U.S., how the U.S. tax process is, and also based on the fact that his business was very successful and was really concerned about the levy or the action that the IRS was going to take to garnish his bank account or, basically stop his business from running. So whenever you get this kind of cases, it's very important that you reach out to a tax preparer or a tax attorney that knows about international taxes and know what they're doing to be able to defend you vigorously. Okay. In most cases, as I have stated in my previous videos, when for a foreign person to be considered to be engaged in U.S. trade or business, we have to go through a whole lot of facts and circumstances, and they are not very easy facts. Okay. And so each situation needs to be determined and actually be assessed accurately before we even take action on the taxpayer's tax return. So chances are that you may fall into this situation where, you know, you've engaged another tax preparer and then, you know, something went wrong and the IRS have issued, has assessed additional taxes against you, and you feel like that's the end. Usually that's not the end. You have the right to appeal. You have the right to protest whatever taxes you think is wrong and you shouldn't be paying, right? And that's why we're here to help. And so if you fall into any situation where you claim a treaty and the treaty has been denied, or you're having some other issues, you know, as a foreign person with the IRS, always feel free to reach out to me and I'll be happy to help you. I help people from all over the world. I have clients from all over the world. And so whenever you need help, I'm always here to help. Just go to my website, schedule an appointment, and then we will talk at a scheduled time, okay? So I hope this story helps you out in planning your future activities and conduct, and also estimating your future liabilities. If you really like this video, feel free to share, subscribe, and like it, and then we'll talk on the other side. Thanks. Bye.